Welcome everyone to Crop Insurance Education for Every Farm. We have offerings available on basic crop insurance education for row crop producers, livestock producers, and specialty crop producers because every farm deserves a safety net. My name is Julia Barton. I am the Farmer Services Director with the Organic Farmers Association. I'm also an organic farmer located in Northeast Ohio. I wanted to mention before you dig in that there is some repetition in the various offerings for different types of producers. Some of that is because some of the programs are interwoven and some of them are available to multiple types of producers. So rather than listening to the same information more than once, if that's not a good fit for you, or if repetition is not your favorite way of learning, you have the opportunity to scroll through by chapters. And you can see at the top of the page here what that might look like. So there are different sections of the presentation that will be named at the top, and you can scroll through to learn about what is most relevant to you and your farm. So easily skip around and learn what you need to know. If you have any questions, please reach out. Be happy to try to answer them or connect you with someone who can answer them for you if I cannot. All right, here we go. Hello and welcome to Crop Insurance Basics for Organic and Specialty Crop Producers, because every farm deserves a safety net. My name is Julia Barton. I serve as Farmer Services Director for the Organic Farmers Association, and I'm grateful to be partnering with Oregon Tilth, Pennsylvania Certified Organic, MOSA Certified Organic, and NOFA New York Certified Organic through a project funded by the Risk Management Agency to bring you information about crop insurance. Let's get started. Today we'll talk about why we should care about crop insurance, a little bit of crop insurance background, some options on crop insurance that can work for specialty crop producers, and then we'll have time for discussion. Why should you care about crop insurance? Throughout this presentation, you'll be hearing from farmers who are part of OFA's crop insurance work group. You might remember the show Reading Rainbow from when you were a kid or when I was a kid. And I loved how that show would bring forth information and then LeVar Burton would say, but you don't have to take my word for it. And we'll be doing the same thing here. So you don't have to take my word for any of this information about crop insurance because you'll hear it straight from the members of our working group. So this is from one of those members who is a Midwest Extension employee who works with small and mid-sized farmers. And here's her input. Mainstream farmers will say that the most important part of the Farm Bill is the safety net, or crop insurance. I began to question that through my work with small and mid-sized farmers when I realized they don't get insurance. These policies are made for certain farmers growing certain crops. Another quote from this same person. I hear a lot of abuse of the crop insurance system by some larger farms. I think that's one reason why some of the small and mid-sized farms don't go after it. But at its core, there's just a lack of knowledge. Farmers across the nation are experiencing extreme weather events. You can see the plastic pulled off the high tunnel there. We know about hurricanes that have happened in the southeast recently. We know about wildfires in the west. Folks are experiencing a lot of extreme weather, which makes it really difficult when your office essentially is outside. You are working in conditions which are unpredictable and challenging. And although we as organic farmers work really hard to build resilience, we sometimes need a safety net. Everybody does sometimes. There's also other challenges facing organic growers, including consolidation in landed markets. And organic farmers want to be able to farm another year, just like every other farmer. And that's why safety nets exist for agriculture, so that farmers can farm another year. Here's another quote from the Midwest Extension employee who is a member of our crop insurance working group. There are barriers not just to crop insurance, but to accessing reliable and credible information about crop insurance. So that's one of the pieces that we're hoping to bridge through this information that we're sharing today. So now we'll share a little bit of crop insurance background. I really like this map from 2022, which shows you organic crop insurance policies nationwide. The darker the little square on the map or the little shape on the map, the more policies exist. And you can see there are portions of the country where there are no crop insurance policies, largely the Southeast, parts of the West. And then there are parts of the country where there are more policies and more folks engaging with crop insurance and with the products that the risk management agency offers through public-private partnership. So crop insurance works like this. It's purchased at a subsidized rate. It's sold through private insurance companies by agents. Different options exist for different scopes of production. And there are also extra options, which are called written agreements, which exist for crops that fall outside of the typical crop insurance options. When you're thinking about crop insurance, it's important to know that you have a lot of options. You do not have to work with an agent that is local to you. You can go work with an agent who specializes in organic production that's somewhere else in the country. You also have a tool available online to seek out agents that are adept in specific forms of policy, such as the whole farm revenue protection policy, which we'll talk about a little bit later. Asking your crop insurance agent or your potential crop insurance agent a lot of questions at the onset is advisable so that you know that they have experience or lack experience in arenas where you really need their help. It's also similar to as organic producers working with a certifier. Good communication and ongoing communication with your agent will help that relationship to be more successful. So there are some good crop insurance options for organic producers, and we'll talk about some of these here today. Multi-Peril crop insurance is what most people think of when they think of crop insurance. It is the oldest and most widely used type of crop insurance policy. This is available for major commodities, which might not be the folks listening to this webinar. Corn, soybeans, wheat, rice, and cotton are the big five. And this type of crop insurance protects against crop yield losses by ensuring a percentage of historical crop production, which is calculated as APH or annual production history. That's an average for that crop over a period of time. APH can be tricky for beginning, transitioning to organic and organic producers because the APH starts over each time a farmer engages in a new practice. So for example, when I'm a conventional producer, that's one form of a practice. When I'm a transitional producer, that's another form of a practice. And then when I become certified organic, that's yet another new practice, which doesn't give one much time to build up a production history on which to base the calculation. It's also hard for organic producers to access the full benefits of this system because of their diverse crop rotations. So an organic producer that has a more diverse rotation will take that much longer to build up an annual production history for each crop in the rotation. Here you hear from Seth Crack from Crystal Springs Farm in Maine. You may have a crop that could never be considered a commodity crop, but it's significant to the income and the character of your farm. To lose that crop for a year or two would significantly challenge the viability of your farm. If you have a crop that fits that bill, specialty crop insurance could be a good candidate for you. Here are the many crops that you are able to be covered through specialty crop insurance currently. You might see crops that you produce here in quantity, or as Seth said, that make up an important part of your operation. And that may mean that specialty crop insurance could be a fit for you. Here you can see Seth standing in his field of buckwheat. So you're thinking about things you're producing in bulk here. So an individual crop that you produce in quantity. Seth covers his low bush blueberries using specialty crop insurance, but he also grows quantity of some other crops, carrots and Brussels sprouts, for example. If, say, specialty crop insurance is a fit for some of his crops, but not for others, or if those other crops are not covered in the county where he is farming them, then other options for Seth in this situation might include whole farm revenue protection, which is oriented towards diversified operations, or he may need to resort to a written agreement, which would be that special request to cover a specific crop that's not otherwise covered in a state or county. And we discussed how Seth uses this type of crop insurance to cover his low bush blueberries. So here you can see a map of specialty crop insurance use state by state. The darker the color, the more specialty crop insurance policies you see. So as we can see here, Florida and California utilize the most specialty crop insurance policies. And you can see other states in which these policies are more popular in the 1,000 to 4,999 range. Here we can see how specialty crop insurance use has expanded over time. So from 2011 to 2022, we can see an increase in these crops specifically. 2011 being the brown line on the graph and 2022 being the green line. And it looks like some of these crops were not even included in specialty crop insurance in 2011. So increase in both use and of those products available, and then in additional products that are now covered by specialty crop insurance, which is great to see. So getting into whole farm revenue protection a little bit. This is a form of crop insurance that was born out of the sustainable agriculture community. Some of our colleagues at the National Sustainable Agriculture Coalition worked very hard to bring this program into the Farm Bill. And it has had several tweaks over time. And from what I hear from the producers in our working group, has become more effective over time. So this product is designed for diversified operations for a farm with up to 17 million in insured revenue. And it covers multiple crops and livestock if you also raise livestock under one policy. It is also available in all counties in all states in the union. Here we hear from Scott Myers from Woodland Acres Farm on whole farm revenue protection. Scott's on the far right there with the shovel. He says, I have a lot of experience with crop insurance. When we decided to transition to organic, our agent was telling us about whole farm revenue policy. We quickly realized that in organic, we were significantly unprotected. It was a paperwork nightmare. We weren't getting insured the way we needed to. It was a mess. We eventually went back to using whole farm revenue after I was made aware of some of the changes that were made. We're about 3 years in at this point, and this time around, the process has gone much smoother. So whole farm revenue protection insures based on the whole revenue of the operation rather than on a yield history by crop. It includes replant coverage for annual crops, with a couple of exceptions, and offers a range of coverage levels from 50 to 85%. As we noted earlier, there is a whole farm revenue protection agent locator because these policies are a little bit different and do require some understanding by the agent. And so there's a tool that helps you find agents that can write these policies for you who have some experience doing so. One of those agents, who is also a farmer, is Noah Went, who's a very active member of our work group. He's on the right there in his field of sunflowers with his business partner. And he notes that whole farm revenue is something not many insurance providers know enough about. And here he speaks from an agent's perspective. Writing a whole farm revenue plan is not worth the agent's time. I do it because it's the right thing to do, but it's not something I get excited about doing. There's no support for it. Whole farm revenue protection has a higher rate attached to it. But if you work with a small farmer who, because of volume, doesn't generate the same income potential, then the fiscal incentive isn't there for the agent. So this is a challenge with whole farm revenue protection, and it can be a challenge in finding an agent who's interested in working with you on such a plan. But again, that locator tool is available, and there are some folks who have specialized in this form of crop insurance, just as some folks have specialized in working with organic producers for risk management. Here we hear from Scott Myers again. Crop insurance is supposed to allow us to farm another year. It's not supposed to guarantee us a profit. When I buy car insurance, I don't insure it so when I have an accident, I get a better car than I had before. I just get it to have wheels to drive. Whole farm revenue protection is designed to make sure I have wheels. And here you can see Scott on the farm. That's his representative. That's Representative Max Miller. And Scott's, I think he's showing him some nodules there for nitrogen fixation in his clover. But that was Representative Max Miller's first visit to an organic farm last spring. So how does whole farm revenue protection work? First, the farmer has to gather the following information. So if that's you, you would pull together your 5 years of your Schedule F, your farm plan for the year, which you have your OSP at the ready. You would get your organic certificate for your organic items. You can, of course, insure both organic and non-organic items using whole farm revenue protection. So say you have organic crops and non-organic livestock, for example, this could be a fit for you. You'll need your sales records, including direct market sales, summaries of coverage for any other insurance policies, inventory for commodities that you have in storage, and then accounts receivable and payable. Then you'll use that agent locator or word of mouth or both to find an agent that can work with you on a whole farm revenue protection plan, purchase the policy. And if you have a loss, you would submit a notice of loss within 72 hours. And then you'd file a claim within 60 days after submitting your farm tax records to the IRS. There's also an additional program that is a sub-program of whole farm revenue protection. It's called MicroFarm. So MicroFarm is protection that is oriented towards farms with up to $350,000 in insured revenue, and it works pretty similarly to whole farm. It does minimize the underwriting and the record keeping requirements, which is helpful. And the farm, in order to be able to participate in this program, cannot have more than 50% of total revenue from commodities that are purchased for resale. Farmers can include post-production activities as revenue, such as washing and packing commodities or value-added products. So here's an example for MicroFarm. Jill and her family run a small CSA. In addition to the CSA, they raise pastured poultry and make jam out of a 1/4 acre raspberry patch. MicroFarm would enable Jill to insure the revenue from all of these enterprises in one policy. So here, if we think about both specialty crop insurance and whole farm revenue protection participation over time, looking from 2000 to 2020, we can see fruits, nuts, and trees, vegetables and field crops, nursery crops, and then whole farm revenue protection, which would be a mixed bag of diversified production in blue there. And you can see there were some changes made over time that increased participation in these various programs. So another thing that can be useful to organic producers are organic price elections. So if you have an individual organic crop, organic price elections make it much easier for both you and your agent to figure out what crop insurance might work for you and how they might calculate what is available to you. So there are a number of crops for which specific organic price elections are currently available, and we continue to need more. This is a really important thing for the organic community to be asking for on an ongoing basis, so that risk management for organic producers can be fair according to organic prices. As we know, organic is more labor, our inputs are more expensive, so there's a lot of investment going into producing organic crops, and the return is also needs to be calculated in such a way that it's fair to the organic producer. There's also a contract price option. So this allows the farmer to insure specific crops based on the contracted price rather than on the price election set by the risk management agency. This works for both organic producers and transitional producers. So if you happen to be in a situation where you're a transitional producer and you've received a price premium through a contract, this can work for you. Or it can also work for you if you're growing some specific type of crop that's needed for a specific processing or specific product, and a premium is being offered for that crop. This can help protect your risks there. So this is useful when the contract price is higher than the organic price election, or if there is no organic price election for a specific crop, because there are several that for which there is no organic price election currently. There are other options and endorsements to look into as well. So depending on the type of policy, a producer can choose an additional option or endorsement to strengthen coverage. So one example would be the malting barley endorsement. Say somebody is growing a malting barley as part of their rotation, there can be an additional contract for that malting barley specifically, and it can be insured to that higher price. Another example would be HIPWI, or the Hurricane Insurance Protection Wind Index. This program was required in the 2018 Farm Bill, and it was offered in 2020. 7 hurricanes occurred in 2020, which is pretty wild. So HIPWI is an endorsement that adds specific coverage for hurricanes to a multi-peril crop insurance policy. So those are the policies that we talked about at the very beginning that cover, 5 main crops really well. It covers the deductible portion of the multi-peril crop insurance policy up to 95% of the crop value. And coverage can be from 0 to 100% to reduce premium and indemnity. So this applies when there are sustained surface winds of 64 knots or 74 miles per hour or greater, according to the National Oceanic Atmospheric Administration, I believe is that acronym. And the HIPWI payments are 100% of the liability in this situation. There's also a tropical storm option that applies or can apply. So the tropical storm option was offered in 2023, and it must be a named storm, which I realize sounds strange, but it has to be like a designated named storm in order to apply. There were 6 hurricanes and tropical storms in 2023 and 2024. And one must have HIPWI, so one must have the previous coverage we discussed, the hurricane coverage, in order to have this tropical storm option. This was, there's also an amended county loss trigger to include coverage for tropical storms. So the loss trigger works like this. If there is a sustained wind speed of 34 knots, or greater, and a total rainfall of 5.9 inches or more in a 4-day period, and they're using the day prior to the storm, the day of, and the 2 days after, then 50% of the liability amount will be paid for each tropical storm. So that's how the tropical storm loss is triggered. So as we mentioned briefly earlier, this uses the National Oceanic and Atmospheric Administration data to determine the precipitation and the wind, the speed of the wind, using a grid system. So when the storm event occurs, within 2 to 3 weeks, the risk management agency publishes the affected counties. And then within another 2 to 3 months, the NOAA and the census data reviews the precipitation data, and risk management agency publishes new counties that triggered the tropical storm payment. So there's kind of 2 layers of knowing whether or not this applies to where you farm. And then in the spring of the following year, the National Hurricane Center reviews the hurricane wind data, and risk management agency publishes any new counties that have triggered a payment. So then we'll get into written agreements. We talked about this early on. So if there doesn't happen to be coverage for a particular specialty crop that you're interested in, or there doesn't happen to be coverage for a crop in the rotation for a multi-peril policy, for example, one can request a written agreement. So this is a special request for a case-by-case agreement with risk management agency for coverage. So farmers have to supply information like the following: planting and harvest dates, 3 years of the production history of that crop or a similar crop, information about a county where that crop is covered. If there's like another county in the state where that crop is a covered crop for crop insurance, then information about that is useful. And then if it is agreed upon, if the coverage is agreed upon with the risk management agency, coverage would begin either of the latter of the 2 dates. So either when risk management agency accepts the application or the crop planting date. I have heard anecdotally from farmers that written agreements are a lot of work on the farmer's part, but sometimes folks do pursue this in order to receive coverage. I've also heard from risk management agency that farmers asking for written agreements and negotiating for written agreements is a communication tool that the risk management agency uses to determine where there may be a need for a new crop insurance product or a new covered crop. So it kind of goes both ways. It's a lot of work, but it's also a way to say that something more is needed, which it clearly is if a written agreement is being pursued. Finally, we'll touch on crop insurance for transitional producers. So producers who have crop insurance coverage on crops that are in transition to organic are eligible for premium assistance from USDA. There are some hoops to jump through in order to access that premium assistance. So there are contract price options for organic and transitioning to organic, which we discussed earlier. And then in order to receive organic crop insurance at organic rates, transitional growers need to fill out a transitional production plan, and a certification entity or a certification body that does such reviews would have to then review the organic system plan or the transitional production plan and approve the operation as transitional. So we have some links here for transitional production plans for crops and livestock. And through this link at the USDA Transition to Organic Partnership Program, one can find a certification agency that is equipped to review those transitional production plans. And then we just wanted to mention the enterprise units by practice type. So this is a recent improvement to crop insurance that we're quite pleased about, because this can help deal with some of the challenges of switching production types, like we talked about at the very beginning, from, say, conventional to transitional to organic over time. So enterprise units by practice type are a unit structure that allows farmers to separate their insured crops into different buckets of insurance. The buckets can be differentiated by various practices, such as irrigation practice, like irrigated or non-irrigated land, or cropping practices, or in the case that would be most applicable here, organic or transitional status. And then the coverage can be purchased accordingly. So oftentimes growers have some ground that's conventional, some ground that's in transition, and some ground that's certified organic. And this enables one to ensure those various crops by their status, by their cropping practice status. So here we hear from Eric Rieker. Eric is both an organic farmer and an extension educator with The Ohio State University. He's also a member of longstanding crop insurance work through the Ohio Ecological Food and Farm Association. And he notes here that crop insurance is complex, but often required or desired by new to organic farmers. It doesn't take but one growing season for them to realize that growing organic crops is a much different system than growing conventional crops. So they desire to protect those risks separately, especially in transition. The new enterprise units by organic practice, now being offered by USDA RMA, allows for separate enterprise risk protection for these practices, organic, transitioning, and conventional, under the same multi-peril crop insurance policy, and for a nominal increase in price. This will be a positive policy improvement for transitioning to organic and parallel production organic farmers. And Eric should know because he works with a lot of transitioning grain farmers in Ohio and the tri-state region, and has an annual conference that serves them now, which is, I think, it's in its maybe third or fourth year at this point and growing every year. Also wanted to make sure to mention the Non-Insured Crop Disaster Assistance Program, which we refer to as NAP. NAP is not crop insurance. It is run through a different agency. It's run through the Farm Service Agency rather than the Risk Management Agency, and it is classified as disaster assistance. But it can be part of our risk management calculation for the farm. So NAP provides financial assistance to producers of non-insurable crops when low yields, inventory loss, or prevented planting occurs due to natural disasters. So it's good to know that farmers can participate in whole farm revenue protection or MicroFarm and still participate in the NAP program. And there's ways in which that can be handled on the back end. So if the NAP payment exceeds the whole farm deductible, the amount over the deductible will be considered revenue to count for the whole farm revenue protection or the microfarm indemnity determinations. It's also important to know that beginning, limited resource, and socially disadvantaged and qualifying veteran farmers are eligible for a waiver of the service fee and a 50% NAP premium reduction. So this is a really good option to start with for some part of your risk management as you're dipping your toe into risk management options and thinking about how they fit together. So here are some NAP examples. Sal has a strawberry field and it is damaged by severe drought. NAP will cover the cost of income to Sal due to the drought, but it won't cover the damage to the plants themselves. Replanting of the strawberries will be Sal's dime, essentially here. And we'll use another example. Rhea experienced a loss to her honeybee colony due to a hurricane. NAP would cover the cost of the income to Rhea, but it does not cover the loss of the bees. So Rhea will need to reinstall bees and queens on her own. Thank you so much. Also have a QR code to share here and would request your participation in filling out the form that is associated with that QR code. And finally, I wanted to invite you to be a part of the conversation on crop insurance and risk management, or on other issues that may be of importance to you. It was great to hear from the farmers in our work group and their thoughts regarding the crop insurance topics we discussed today. And I want you to know that we are meeting regularly with farmers, thinking through challenges and solutions in these various topics. So please do shoot me an email or use that QR code there if you'd like to join us and be a part of farmer-led policy solutions with the Organic Farmers Association. Thanks so much. Appreciate your time.